Awesome. Can you see this, Carmelo?
I see it. Full
Okay,
screen.
awesome.
Thank you.
Thanks. So thanks, Carmelo. And yeah, so this presentation is it talks about my experience investing in Alberta real estate, what the experience has been like thus far as a real estate investor, venturing into a fairly new territory for me, and also I'm going to talk a little bit at the end about some of the opportunities that are currently available in Alberta, primarily Calgary. But before I get started with that, just a little bit about myself. My name is Alex Zhvanetskiy. I'm a Toronto realtor with Remax Condos Plus. I also do sell pre-construction properties in Calgary, Alberta. And I spent over a decade in Toronto's condominium industry before getting into this business. I've been a real estate investor since 2013. I have properties that I manage throughout Ontario and Alberta, multifamily, single family, and short-term rental as well. In 2022 and 2023, I was in the top 1% in GTA condo sales on SHRED from over 70,000 realtors. And if you want to connect with me, there is a QR code there on the screen. Feel free to scan that and connect with me through there. So, before I kind of talk about my experience in Alberta and my personal experience outside of Alberta, I'm just going to kind of talk a little bit about why I think real estate as an asset class is something that is very profitable and, especially in the last 20 to 25 years, has been a major pillar for wealth building for many people that have achieved financial independence through owning real estate as an asset class. So first of all, it's a tangible in-demand asset. So, especially in markets like ours in the Greater Toronto area and throughout Canada, we do continue to experience immigration and migration into our city and into our country as a whole. And a lot of people that come here are coming here with the goal of home ownership. And even before they can achieve that goal, they do need a place to live. And in some markets, there has been a major shortfall of new purpose-built rentals being constructed, and people have turned to investors to help bridge that gap through purchasing investment properties. Real estate is a basic human need. Your investment is backed by real property. You're able to also gain appreciation on the entire property's value, not just on the amount of money that you invested to purchase that property. It is considered to be reasonably safe, as over long periods of time, and when I say long, I mean over 5-10 years, real estate has continued to grow in pretty much every market, and the buy and hold strategy is a tried, tested and true strategy. I'm not talking in this presentation about somebody who's looking to buy a property let's say in pre-construction with the exit plan of selling it on assignment, or somebody who's looking to, heavily leverage themselves and, kind of try to buy as many properties as they can. This is about a much safer, more tried and tested strategy, which I use myself. So there's several ways that you make profit with real estate. One is just through appreciation. So over time, the property's value increases. You also pay down your mortgage principal over time, so you do get appreciation in those ways. There's also cash flow, which exists in some markets and some property types. In markets like ours in the Greater Toronto area, for no such thing as cash flow. You have to go multifamily for cash flow. And real estate is also a tax shelter. So it does allow you to shelter yourself from paying income tax at the end of the year when you, are able to write off things like the interest on your mortgage, improvements on your property, traveling to your property, time managing your property, and so forth. So there's several ways that you can make money through real estate and keep more of your own money. Now, this chart is a little bit out of date. It's from last year, but it just gives you kind of an understanding of where Toronto real estate prices have been historically. Yes, this presentation is about Alberta, but when I look at markets like Calgary, what I see is essentially Toronto's market 15, 20 years ago when we first started to, exponentially grow. You can see that in the Greater Toronto Area, regardless of when you purchase real estate, even when you purchased it, at times it seemed to be like all-time highs, like in 2017, where then there was a drop into 2018. When you look at it in 5 or 10-year increments, pretty much any point on this chart that you have purchased a property, you have been able to capitalize on appreciation. Like if you look at 2017 and then you look at 2021 and 22, you can see substantial growth, even though in 2018 it seemed like anybody who purchased in 2017 got ripped off and made a bad investment. Similarly, anybody who bought at the most recent peak of the market, which was during the pandemic in the spring of 2022, even though today when we reflect on that, there's a lot of memes and Instagram and other social media videos making fun of people who are now like selling below what they purchased their property at. When you're going to be looking back on this in 2027, 2028, it's going to seem like buying in 2022 was a great deal and you would have wished that you bought more than one property at that time. So let me talk about this investment here, which I made in November 2022, but let me back up a little bit. So in 2021, to purchase a single family home in Midland, Ontario, which is about 45 minutes north of Barrie. The home was priced at, I believe, about $550,000. It wasn't going to cash flow. It was a multiple offer type of situation. We submitted our offer. The agent then, like the listing agent, then didn't come back to us in time. We called to follow up on our offer. He told us that the seller is taking a shower and he can't review our offer. Essentially, what I think he was trying to do was buy time to see if another offer will be improved. Our offer expired at that time. And then that listing agent came back to us and asked, tried to get us to move forward with our offer that we originally placed, something that we backed out of because at this same time, a friend of mine was looking at some opportunities in Edmonton, Alberta, in a suburb called Leduc, where you could buy a pre-construction duplex with a fully finished basement suite and a main level for about $410,000 at the time. We ended up buying that investment. This was my first time buying a property in a market that I couldn't drive to. It was something that in the beginning, I wasn't sure how comfortable I was going to be with. I had to source out property management. I had to do everything remote. I never saw the property. I never drove there. I still have never seen that home except for in pictures. However, I do see the money that comes into the bank account every month. And unlike that purchase that we would have made in Midland, Ontario, that we would have lost money on, and now with higher interest rates probably would have been maybe even $1,000 out of pocket on every single month, that property continues to cash flow, even though we renewed our mortgage at a substantially higher interest rate than when we originally made that purchase. So, I understand that purchasing real estate in a market that you can't reach is not for everybody, especially in Canada. But I think that that's something that's like a disempowering, mindset approach that we need to overcome, because investors in the US have no problems investing in markets they can't reach, but it just seems like in Canada, we want to be able to drive there. And I think that as long as you purchase in a market that has the opportunity to provide you with AAA tenants, it definitely should not be a deterrent. In fact, if you can't buy in your own market, that may be your only choice to look at other markets. And that's why in November 2022, I came to know about an opportunity that existed through a colleague of mine in my brokerage that worked for another sub-brokerage called Remax Wealth Builders, where I could purchase this condo, which ultimately I did purchase. It's a pre-construction condo in downtown Calgary. Calgary is, a market that until about 5 years ago seemed to struggle and be flat because it was heavily based on the energy sector. However, it has started to boom at the time when I purchased this condo because of a lot of migration into their market for more affordable housing. I saw Calgary as a market that can provide me with AAA tenants, and already having had experienced investing in a property I couldn't drive to, this was something that I was quite comfortable with. So this is a property I bought in November 2022. It still hasn't closed. It's going to finish construction and close in most likely 2027. And some of the things that revealed to me was that the purchase price for this, and this is a condo like right in the heart of downtown Calgary. It's essentially like, if I was to buy a condo at, I don't know, like Front and Yonge in Toronto. This was a one-bedroom condo that was $440,000, included parking, it included a locker. I was able to purchase this with only a 10% deposit. And this does come with a rental guarantee as well, which is something that I've never heard of prior to that, essentially meaning that whether I have a tenant living in this property or not, for the first 2 years, the builder and their property management company does guarantee me $2,200 a month in rent. And there's also free assignment, which is something that we don't know about too much in the GTA. Essentially, assignment is very rarely free, and a lot of builders in the GTA don't even offer it. So, I saw this as something that really made sense on paper, essentially, especially at that purchase price with that rental guarantee, even at higher interest rates, like 5%. I saw this as something that was going to be very close to cash flowing as a condo, and that's something that I haven't seen in Toronto for probably, over 10, 15 years. So, that's why I kind of pulled the trigger on that and decided to make that purchase. But in this presentation, I want to talk about, kind of the analysis that I did at that time, where I was comparing, buying that property in downtown Calgary to buying a pre-construction property in a similar location in Toronto, which is called Queen Church Condominiums. So a little bit about Queen Church condos in Toronto and how I did this analysis. So if I wanted to purchase a unit in this condo in Toronto, my purchase price would start at $700,000. For $775,000, I can essentially buy a very similar unit to the one that I bought at the Broward, being 480 square feet, being one bedroom, one bath. Very, very for me to purchase this unit. I would need to put substantially more down. I would need to put 20% down. And the price per square foot for this unit is $1,600, $1,600 per square foot. And if I wanted to purchase parking, I couldn't even purchase it because parking is available at an extra cost of $125,000 only for units that are 3 bedrooms. So, when I kind of looked at this and did my analysis, and I looked at the potential rent that I could get, which in 2023 in downtown Toronto, a 1-bedroom average rent was about $2,500. Today, it's maybe about $2,400, $2,450 with parking. And when I kind of like ran that analysis and compared it to what what that would look like to me, it kind of didn't really make a lot of sense on paper, and made that decision to buy in Calgary make even more sense. So when I looked at Calgary's rents, I could see that, in February 2024, a 1-bedroom condo was renting for pretty much, a very similar amount to the $2,200 rental guarantee that they were offering me. So basically, that rental guarantee was something that I thought was kind of being conservative, because in 3-4 years, I could easily see rent growing by more than $150 in that market, just to compare it to Toronto. In Toronto, we've had like a 20%, rental growth from 2019 to 2022. So, so this is the unit, again, at Broward. Just a little bit more information about that and how it compares to the one that was at Queen Church. For this property, I'd only need to put 10% down, 5% when I signed the contract, and another 5% a year from that point. As a purchaser of this unit, I would get a free parking space and a free locker, whereas in Queen Church, I couldn't even purchase a parking space, and it was $125,000 for anybody purchasing a 3-bedroom unit. This unit came with a 2-year rental guarantee. So again, whether I had a tenant in there or not, I'll be covered. It also came with 2 years of free property management provided by the builder's property management company. They also had a promotion where there was 2 years no condo fees, there was free assignment, and there was a free hassle hassle-free exit on the MLS, where I could just pay a flat fee for a real estate agent in Alberta to sell this unit for me on the MLS if I didn't want to keep it after the 2-year rental guarantee wore off. So essentially, I saw this as something that was completely hands-off and risk-free for me, and something that I wouldn't have to do really anything about until 2029. So 2 years after closing, and the rental guarantee ends, and then I have to decide if I'm going to be re-renting that unit through a realtor or selling or doing whatever. But for me, I always look at real estate as a long-term investment. So I don't have any plans at this point or in the foreseeable future to sell this unit after closing. This is just a little excerpt from my contract. So yeah, you can see, here just basically quotes that there is a rental guarantee of $2,200 that's going to be offered to me for managing this condo. And then when I kind of broke it down side by side, I could see that a Queen Church, a similar size condo will be $775,000. In order for me to purchase that condo, I need to put down $155,000, where at the Broward, for a $440,000 condo, I only needed to put down $88,000. The full $155,000 for Queen Church would be due within a year and a half, while at the Broward, I would just need to do $444,000. When I signed the agreement, another $44,000 within 365 days, and basically everything else in 2027. No, sorry, my mistake. I'll need to do $444,000 within 365 days, which is, Carmelo, is my math off?
Alex, again, no, you got to put 10%, which is 44,000. It looks like it's within the first year. The rest at closing.
Yeah, that's right. So that's why my math is off. So I would need to do only $44,000, in the first year, and the other 44,000, so 20% in total in closing. And that's just because when you purchase a property for investment purposes, you do need to have 20% down to do that. The maintenance fees were also a lot less, and like I mentioned, there was a promotion where I get 2 years free property management, 2 years no maintenance fees, hassle-free exit. I get a 2-year rental guarantee, free parking, and a free locker. Whereas if I was to purchase like a pre-construction condo in downtown Toronto, I wouldn't be able to get parking. I would need to pay a realtor to find a tenant. Of course, for me, I wouldn't really need to do that as a realtor, but I'll have to pay the other realtor that brings a tenant. I may not be able to assign it, and the builder may also not even allow me to rent it out during interim occupancy, which is just create a very substantial risk. And if you leverage yourself to a purchase like that, and then you have any situation or life-changing circumstances, it's something that can be quite risky. So so here's just a little bit more of a comparable. So today, rent for a 1-bedroom condo in downtown Toronto is maybe about $2,500. Let's forecast that into the future, say it continues to grow, so in 2027 it will be $3,200. Even at $3,200, my mortgage on like that Toronto condo would be more than the rent I have coming in. Then I add on top of that property taxes, I add condo fees, I add landlord insurance. I'm going to be about $912 a month in the hole just to run that condo. So I'm basically only able to, bang on appreciation happening, which is not really, while it will happen, it's just like how sustainable is it to pay $912 a month out of pocket just to float that investment? While at the Broward, at that $2,199 2-year rental guarantee, so even I'm being conservative with that, assuming that rent doesn't appreciate any more than that in their market, that mortgage at 5% would be $1,879. Property tax is $137 a month on that property. There's a 2-year no condo fee promo, which would allow me to cash flow for the first 2 years at $133 a month. So, it was something that was very, like no brainer for me. It's an opportunity to invest in a very strong market. I when I look at Calgary, I think it's most likely like Canada's 3rd or 4th major market after Toronto, Vancouver, and Montreal. And just the types of promotions that are available out there are, pretty pretty significant. So, basically all the pre-construction properties that are purchased from Truman Homes come with, a deposit plan that's as little as 5 to 10% down. A lot of the condos, especially like this condo, offered free parking. There was no condo fees for 2 years. There were some free suite upgrades. There was a hassle-free MLS exit. There was free assignments, free rental guarantee, and free property management services. This is just to kind of summarize all the perks that I got when I purchased this unit, and why, Truman does make it very easy for somebody to get into purchasing and owning an investment property out there. So I want to talk a little bit about the marketplace as a whole. So this does show that in early mid 2024, housing prices in Calgary's market continue to rise. When we compare that to how we're doing in the Greater Toronto area, I'm sure you've seen on the news, housing prices have fallen across the board, from detached to condo apartments, condo apartments being the most significantly hit. Calgary's market continues to rise across the board. Like the numbers that I'm showing below are from September 2024 compared to, the same September 24 numbers in Toronto. So the reason for that is the migration that they continue to experience in Calgary. Like most people that are moving to Alberta are moving from places like Ontario and British Columbia because of job growth, job opportunity, and more affordable real estate market and high wages. This graph just shows you a little bit about how Calgary's real estate has performed in the last year. You can basically see it's similar to these same numbers from WOW. You can see that across the board, property values have experienced double-digit growth, whether it's for apartment condos or single-family detached homes. There's lots of benefits about investing in Calgary and why people continue to move there. One of the things is the close proximity to Banff and the Rocky Mountains for those that enjoy the outdoors. They have a lot of sunshine. It's been rated one of the top most livable cities in the world. The population there is anticipated to beat out the population of British Columbia by 2043, primarily due to housing affordability. There are tech companies and other businesses that have structured their corporate head offices and have shifted them there because of more affordable office space and more land. Businesses like TELUS and WestJet are shifting their head offices there. This is something that really appealed to me. This just talks about being a landlord in Alberta versus being a landlord in Ontario. So if you've kind of seen some of the headlines that we get on the news here about challenges that Ontario landlords experience with their tenants, unfortunately, this is all we see on the news, because this is not going to report that, this month, 99.9% of tenants paid their rent on time and, didn't cause any issues. They're obviously going to only report on the things that get the headlines. But, one of the, main challenges that we experience in Ontario as landlords is that the Residential Tenancies Act is very heavily swayed towards tenants. And, there may be justification for this, because there's quite possible there are some, unethical landlords out there, but it does seem to be a lot easier to be a landlord in Alberta versus Ontario. So for example, in Ontario, properties that are built prior to November 2018 have rent control. In Alberta, there's no rent control, meaning that you can increase the rent by whatever amount you want after a year. At the same time, after 1 year, or a fixed term tenancy, the tenancy expires. So let's say you sign a 1-year lease with somebody in Alberta. After that 1 year, that lease is done. The tenancy is over. While in Ontario, after that 1-year lease is done, the tenancy goes month to month, and you need to provide 60 days notice to end that tenancy. And there's reasons why you can and cannot end that tenancy. In Alberta, security deposits are permitted. In Ontario, security deposits are not permitted. Pet provisions are not permitted in Ontario unless you're like renting out in a condo, and that condo has its own rules and policies around pets. Well, in Alberta, pet provisions are fully enforceable. And in Alberta, the landlord-tenant board wait times are 14 to 28 days to get a hearing, while in Ontario, it can take 8, 10, 12 months to get a hearing. So, the laws out there are also a lot more landlord-friendly, which was something that really appealed to me as an investor in that market. So to just talk a bit about, the property and the project that I bought, that project has sold out. It sold out about a year and a half ago, but there are some other really good opportunities that are available out there, whether, it's to purchase, a freehold property, like, Bridgeport freehold homes in Chestermere, with prices starting from just under 600,000 and 10% down, to, Watercrest condo townhomes with prices starting in the 400s. There's condo opportunities as well, with opportunities that are, quite affordable. There are some condos out there that start in, the mid 300s for a 2-bedroom condo with a rental guarantee of the same 10% deposit structure that I was able to, take advantage of when I bought my unit. And of course, if anybody wants to, ask any questions or book a call with me about any of the opportunities that exist in Alberta, in Calgary's market, feel free to do so. I'm able to offer basically platinum access for any of these Truman Homes projects through the people at my brokerage that I bought my unit from at the Broward. So, Carmelo, that was a lot of talking.
It was a lot of talking. I kind of sat back and listened to most of it because, again, there's a lot of good information. If anyone does want to reach out and contact Alex, I did share your contact information in the group message. And also, if you want to book a 15-minute consultation with Alex to talk about these new properties that are